What if I told you that most people work their entire lives and still never become wealthy, while a few people build massive wealth by simply thinking differently? Intro. Welcome to Munger Wealth Method. On this channel, we study the thinking patterns of the world's greatest investors so that ordinary people can make smarter financial decisions. Today, we are going to talk about one powerful investing philosophy inspired by Charlie Munger that can completely change the way you look at money, investing, and success. Because the truth is, wealth is not built by luck. Wealth is built by decisions. And most people make wrong decisions again and again without even realizing it. Let's start with a simple question. Why do most people struggle financially even after working hard for years? It's not because they are lazy. It's not because opportunities don't exist. The main reason is mindset. Most people chase quick money. They jump from one idea to another. Crypto today, stocks tomorrow, trading next week, and some random business next month. They are always running, but never building. Charlie Munger once explained that real wealth comes from patience, discipline, and rational thinking. Yet patience is rare. People want fast success, and fast success usually leads to fast failure. Charlie Munger believed in something very simple. Avoid stupidity instead of trying to be very smart. This means you don't need genius intelligence to become wealthy. You just need to avoid common mistakes. For example, don't invest in businesses you don't understand. Don't follow the crowd blindly. Don't risk money you cannot afford to lose. And don't panic when markets fall. Smart investors don't react emotionally. They think logically. One major lesson from Munger and Warren Buffett is long-term thinking. Most people invest hoping to double money quickly. Smart investors invest to build wealth slowly over years. Imagine planting a tree. If you dig it up every week to check growth, it will never grow. Investments work the same way. Time is the biggest advantage. Money grows when given time, but people get impatient. And impatience destroys wealth. Exciting investments are often dangerous. When everyone talks about an investment opportunity, it is usually already too late. Munger preferred boring but strong businesses. Businesses that consistently make money. Businesses with strong management. Businesses that people will still need after 10 or 20 years. Investing is not entertainment. It is discipline. Munger often said, avoiding big mistakes is more important than finding big winners. Let's look at common mistakes. Investing without research. Copying friends or social media advice. Using loan money to invest. Selling investments during market panic. Chasing quick profit schemes. One big mistake can destroy years of savings. So smart investors protect money first. Growth comes later. Patience is the hardest skill in investing. Markets go up and down. News scares people. Prices fall suddenly. And many investors panic, but experienced investors see market drops as opportunities. They buy strong companies at lower prices, while others run away. Patience separates winners from losers. Charlie Munger was famous for reading daily. He believed learning never stops. He studied psychology, economics, history, business, and science. Because decisions improve when knowledge increases. If you want better financial results, increase financial knowledge. Spend less time scrolling. Spend more time learning. Knowledge compounds like money. Investing is more psychological than mathematical. Fear and greed drive markets. When prices rise, people become greedy. When prices fall, people become fearful. Smart investors control emotions. They follow strategy, not feelings. And emotional control leads to better decisions. Munger focused on buying value, not cheap prices. A cheap stock is not always a good investment. A strong business at a fair price is better than a weak business at a cheap price. Look for companies with strong profits, good management, competitive advantage, long-term demand, because quality businesses survive market crashes. Weak businesses disappear. Wealth building is slow, but powerful. Save consistently. Invest regularly. Avoid unnecessary debt. Increase skills. Increase income. Control spending. And let time work in your favor. Small, smart steps repeated over years create huge results. If you are young, your biggest advantage is time. Start investing early. Even small amounts matter, because compound growth turns small investments into large wealth over time. Don't wait for perfect timing. Start learning and investing wisely now. Let's be honest. Investing is not magic. There will be losses. Mistakes will happen. Markets will fall. But long-term discipline wins. Success belongs to people who stay consistent, not those chasing shortcuts. Charlie Munger once said, "The secret to getting ahead is getting started and avoiding stupidity." So start small. Learn daily. Think rationally. Invest patiently. And avoid decisions driven by emotions, because smart thinking builds lasting wealth. If today's lesson changed the way you think about money even slightly, then you are already ahead of many people. And remember, wealth is not built overnight. It is built decision by decision,